Hi guys, just wanted to do a quick follow-up video on the stop hunt level that I was discussing in the earlier video this morning. People may look at this and think, oh, it's broken out, but that is absolutely not the case at all. And by the way, this isn't a very big move. It's probably 10-15 pips, something like that. It's absolutely normal. This is how you should view stop hunts. The other thing I should mention is as well that those recent sell-offs as well are a really nice addition to have to the overall stop hunt concept, because what happens is those recent sellers ensure that there are stops there, right? Because they've just taken those trades. Now imagine this price action where you see it's just like 1, 2, 3, 4, 5, 6 candles in a row kind of thing. Imagine if that had just continued up through the level like that. There's less chance that that's a stop hunt, because it doesn't halt at the level and start to present that it's going to sell off, because obviously there's less likelihood that resistance traders would take that trade. Whereas if it starts to attempt to sell off, as it had done here and here, obviously, etc., then that's going to induce them in. It's not to say that sometimes there isn't a case to argue that that's a potential stop hunt. It's all to do with the previous move and how far it had gone. If it hadn't gone very far, then those stops will still be there. So if you get that price action that just goes all the way through without the sell-off prior to the level, and obviously it'd be buying if it was the other way around, then there's a case to argue that there's still a potential stop hunt there. But what's really nice is that you have some entry cheese at the level. That's what I call entry cheese. It's the cheese that tempts the trader in, just like the cheese that tempts the mouse to take the cheese. It's just the same thing. It's just a human trap. Until you enter the market, your money is safe in your account, and it's not fair game. But when you are presented with the idea that it's a potential trade, it looks like it's going to work, you are a resistance level trader, a support resistance level trader, then you're going to come in off the sidelines if it's convincing enough, and take some trades. And from there, then we can make some very accurate assumptions based on what you'll do and where you'll place your stops. And it's all to do with level selection. That's the biggest thing I can sort of try and articulate to you, is the quality of the level is determined by how many times it's touched. The more it's touched, the better. So if it's just like a standard level of support, that's good. The more it's touched, the better. You want a minimum of 2 times. But if it's also been resistance, then support, then resistance like that, they're great levels too, arguably a little bit nicer levels, etc., because obviously people are trading the hell out of the level. So it's easy to understand where they're placing their stops from there, and you can see the behavior because you can see them taking trades. And none of this is in hindsight, because all we're simply doing is we're waiting for those traders to make their moves. We're becoming the level trader in this case. We're using that analysis to understand where our opponents are, but at the point of entry we're not taking trades, we're allowing them to hang themselves. Now here's the thing, this could turn out to be a breakout, pullback and a trend continuation. It may not be a stop hunt, but it's got all the ingredients for it to be a stop hunt. And don't be perturbed by the fact that it seems like it's breaking out, and I'll just explain why. So the stops have been triggered, or are being triggered at this moment. Okay, now that's allowing potentially something big to start to sell in the face of that forced buy-in, because these sellers are now in a forced liquidation position, be it through stops automatically being triggered, or by virtue of the fact that they're just manually exiting. Maybe they had a stop up here but with one eye on this level, and they've gone, you know what, this level's gone, screw it, I'm out. But importantly, when you get this confident move through the level, what this does as well is this induces and seduces your breakout trader in, because they've been watching this level too, and they've been gagging for it to break so that they can take a trade. Because the breakout trader's mentality is, if there's this well-defined level, right, that everybody's been trading off, and it's been historical resistance, support, resistance, etc., when it pops, in their view, that's going to fly. That's a breakout trader's heaven. So this is just serving to induce more buyers into the market, But these are willing buyers, these are happy buyers, whereas the previous buyers, the stop hunt buyers, those people are obviously negative about that because they've just lost money. So this is a good thing. So these are piling in, and this again is inducing in more buyers. So don't be fearful of this. This is how it looks. This is what a stop hunt looks like. And, you know, you could end up with a massive wick and then it turns like that. The other things you should watch out for is when it breaks up like that, the pullback, and then it'll bounce off the level more than likely. Again, probable manipulation, because that's going to seduce and induce in who? The pullback traders who love a level that breaks and pulls back into that prior level. So it's the same process. Then you've got more willing buyers coming in, and then boom, you can have the stop hunt from there. So stop hunts can be a lot more complex than people understand them to be, than you know, beyond just a single spike beyond a level like something like that, or something, you know, just literally a spike above a level of resistance or support. But it's for all it presents itself differently every time, it's always the same. The process is always the same. Traders are being trapped, traders are being induced and seduced into the manipulation, and then ultimately, because of the way that we enter trades, it acts as an optical illusion. Our trading as individuals, is derived from how we come to those decisions, is derived from our historical analysis, right? So hopefully you agree with that. You're looking back at those previous structures to decide whether or not you've potentially got a setup. I don't really care what type of trader you are employing that tactic. It's then a question of, is the reaction off the level lining up with that previous analysis, that historical analysis? Is it enough to tempt you in to take a trade? Because most people don't just place orders. There's not too many people to place orders at a level unless you're taking an absolutely enormous trade that can move the markets, and you know that's not a position most people are in. So otherwise, what tends to really happen is people place orders and it's just death by 1,000 cuts, because levels get breached constantly. It sounds nice because you pinch off a tight entry and the risk's small and you can make all this upside, but rarely does that work. So what happens is people are looking for some form of confirmation, just maybe a smidgen, just it's different for everybody, but it's a confirmation that this historical analysis, this understanding that this is a level of resistance, is actually acting as a level of resistance, as it had done here, and paid people all those multiple times previously. That's the entry cheese, right? That's the EC, that's the entry cheese that tempts the trader in off the sidelines. They're not going to risk any of that money. It's just going to stay safe in your account until you commit capital. Now, what is the process by which you commit it? You commit it by that historical analysis, number one. Number two, the entry cheese, and number three, the hard right edge, which is the space to the right of all our charts that we all have, that nobody pays attention to, because all the focus is in on that entry cheese, all the focus is in on that previous historical structure, all the focus is on that reaction, and then, you know, then the trader comes in. See, these shorts didn't foresee this, right? Now they're in trouble. They didn't foresee it because they're not thinking about the hard right edge. The hard right edge will fill with price. It just requires some time. So while manipulations and traps occur and seem to present themselves differently all the time, it's always the same process. That's the beauty of understanding trading traps and manipulations, because the cover that it gives itself is the fact it does present differently, but the process remains consistent. You've just got to understand the differences, the nuances, how to read it at the hard right edge. And if you want to learn how to do that, you know the drill by now. Click on the link below, and I'll see you in my inner circle. Take care.